You as well. Been a long few months.
It's been a long fucking year. That much I can tell you. But you've been through this game a while, and I've been through this game a while. It's part of the story, right?
Yeah, listen, you always look back after you had a year like 21 and you're like, God, I should have taken more profits. I should have built up more liquidity. It's funny. I remember Arthur Hayes put out a tweet early on in the year about this could be a bad year. Barry Silbert, ironically, because he's in so much, trouble himself, he put out a tweet saying, this is going to be a bear market. It wasn't so out of the ordinary to think this was going to be 21 was going to be a tough year, right? I mean, I talked about
22, you mean 22?
Right,
Yeah.
22. I talked about it on CNBC a lot, right? You should have a rate hedge on. Rates are going to go higher. Asset prices will go lower. Yet by the end, the combination of central bank actually getting orthodoxy and raising rates aggressively, more aggressive than most of us thought they would, and that uncovering a web of dumb leverage, fraudulent activity, stupid activity, some combination of bad behavior and dumb behavior, which I think led us to, a December low with tax loss selling complete. When we talk about blood on the streets, it was just painful to talk crypto. And so if you had to sell, you sold. If you were leveraged, you got out of your leverage. And I said before, the market was pretty clean. Now we've had a 30% bounce, and it feels, it's got to be a little careful. That's a lot of short covering. It's some new money. It's funny. We've seen the crypto hedge funds, for the most part, were decimated. And again, you do the math. You're down 80% last year, and you're up 20 this year. You're still down 76 from the high. It's very hard to dig out of a big hole. But we're seeing pockets all over the TradFi hedge fund space of crypto pods where a multi-strat had a great year last year, said, hey, come work here. Here's $100. Go at it. Or here's more than $100. And so you name the big multi-strat, they've got people trading crypto. And so it's a real shift and some of that new money is getting into the space.
So here's a question for you I want to dig into a whole bunch of stuff about the market, but you launched Galaxy at the peak of the prior bull market and you had to deal with this. And here it is again. How does it feel different this time than last time?
Yeah, it feels a little worse, to be honest. I think of Galaxy, when we launched, we really didn't have any business. And so we thought we were going to build a business, and it was really difficult to. So for the first couple of years, we really did very little other than trade our own portfolio. It was a smaller portfolio. It was easier to hedge. We did a great job in 2017 or 2018 of preserving capital. I learned a lesson there, which I didn't want to forget this time. The first 70% down in that market, we hadn't lost a penny a book. And that was a bit of luck, a bit of genius, a bit of aggressive hedging. But I felt I should walk around and strut and get a wax statue of myself. And then by the end of the year, we were down 30%. I was like, how did that happen? Well, a market down 95% is down 70 and then 70, right? And so we scaled in and getting in early can crush you, right? So if you just look at great shorters, they don't matter where they short the thing from, because if it's going to zero, it's an 80% return or a 78% return, even if you miss by 30%, right? I do a great trick to young traders when I show them the NASDAQ bubble in 2000. If you pick the ultimate top or you sold it down 28%, on the lows, your return is almost identical. It's off by 4% because you're selling the same notional amount. Well, the opposite happens for buying. And so buying, you've got to be very precious of trying to make sure you're close to the low and not scale all the way down because you're buying in notional dollars, or do it in tokens, right? Hey, I'm going to accumulate 10,000 Bitcoin, 1,000 Bitcoin, whatever, and accumulate them in tokens. But if you do it in dollars and you spend a little too early, you're like, oh. And so, listen, why is this year a little harder? We're a much bigger firm. And so where anxiety comes for anybody, for any individual investor, for a household owner, a business owner, is when revenue is less than expense, right? Because then you're like, and you're starting to burn the furniture. And I think what happened in 21 for lots of companies, capital was cheap, almost free, a lot of big buildup on forward, and you wake up and you're like, oh, we can't get capital. Access to capital's got more expensive. My costs are way too high. And so this has been a painful process of cutting costs, still wanting to invest. And I think that's not finished yet for our industry. I think a lot of people have big illiquid portfolios. The liquidity to illiquidity balance got shifted. Yeah, I'll take a little of that. I'll take a little of that. Venture stuff, private equity stuff, strategic investment stuff. And so market goes up 30%, your liquid stuff goes up. Your liquid stuff, maybe it's, who knows? And so I think this is going to be a challenging year as people need to rebuild liquidity and not stop investing in their business.
So let's talk about the macro, because that was the thing that, I mean, I got surprised. I knew rates